Welcome. I am the FX Savant, and in today's video, I have an NZD-JPY trade for a 71.5 take profit, risking about 22.5 pips, which equals out to right around a little over a 3 risk to reward. Pull it up. This one was not sent out to the free members. This was pro signals chat. But as you can see at 5:24, 5:25, I sent out the chart set up before NZD-JPY. We're going to get in. Also in this video, I want to go over and help you all understand structure. I see a lot of people don't understand how to identify or even know what structure is. And I think that this would help your trading tremendously if you could be able to identify and understand structure the right way. With that said, if you're interested in the rest of this video, go ahead and do me a favor, drop me a thumbs up, make sure you're subscribed, and let's get into the video. Really what I want to get a point across about structure is that I've had a lot of people who I see cannot identify or understand structure very well. Also, in this video, I'm going to go over structure, market structure, which is a big component to trading. If you can identify it and understand it, it will help your trading tremendously and you will see massive gain. If you don't, well, you'll be struggling. So let's get right into it. I'm going to try to go through this analysis pretty quick, this trade overall, so I can focus on the structure topic because I really think it is some very valuable content. So on the monthly, what do we have? What's the number one thing that everyone knows about trading? Buy low and sell high. And also, buy low and sell high is relative to the time frame that you're on. This is the overall view of the whole pair. We have a market that has just impulse, correct, impulse, all the way up. We are in an overextended W formation. I move down, I move up, I move down, and I move back up, which this is way overextended. We are at the highs on the monthly. On the weekly, let's drop down. Market can't go in one direction forever. We know it needs to correct itself. So even if it is impulsing to the upside, it needs to correct itself and come down. If it's impulsing to the downside, it needs to correct itself, come up a little bit before it continues down. So if we're in an overextended market, we want to see the movement to the downside. We are at the highs. We have an overextended W formation on the weekly. We have a big overextended W formation on the monthly that the neckline is way down here. We're not worried about that. That wouldn't complete until 2024. But on the weekly, we have an overextended W formation. Price went down, price went up, price went down, price went up. This is overextended to the upside. We want to see a correction. Where would we like to see the correction come to? Overextended W formation, we'd like to see the correction at least come down to the neckline because this is the most recent resistance that price broke above. We would like to see it come back and test it as support. Monthly and weekly, overextended to the upside, overextended W formation. Okay, on the daily, the overextended W formation is really apparent here. So we have the move down, the move up, the move down, and we had it move all the way up without getting a correction. We'd like to see it come to at least the neckline of the W formation. That all being said, we're on the daily. We don't want to just jump blindly into the trade. We're going to jump down on the 4 hour, which is our entry time frames. We've got our direction from our directional time frame biases. Our monthly, our weekly, our daily are all giving us signs that we would like to see the market come down. We want to see it correct, not necessarily impulse down and start a downtrend, but we have room for the market to come down. We need to see that exhaustion. So in my last video, what did I talk about? The head and shoulders pattern. On the 4 hour, what do we have here? We have price that just made its way up. We extended all the way up. We came and corrected, found a little resistance area right in here. And then what? We broke above it. Did we break and close above it? Yes. If we want to get technical, wick is right here. Top of the candle is above the box. We did break and close above the left shoulder, started an impulse to the upside after the correction. And then what happened? We immediately came back and broke back into the region. So we immediately came back and broke back in. And not only did we come back in, we came all the way back down to the most recent low. So if we have enough energy to make an impulse to the upside and enough energy to impulse right back down to where we started, we probably don't have enough energy to impulse and create a higher high up above what we just did, what the market just did. As I explained it in the previous video, we can start looking for the right shoulder. How can we tell that the right shoulder is going to hold? Well, if we draw our resistance level of where the left shoulder is, we don't want to see price break and close above this left shoulder. So as long as price stays below this area, we're still bullish because we're still in an impulse correction phase to the downside now that we've impulsed from the highs. So let's play it forward on the 4 hour. What did we get? Price came up. We did not break and close above the left shoulder. We're starting to impulse. We had our correction. Where did our correction stop? Now this is all confluence I'm using. We impulsed down, we came back, did not break above the 786. We stopped right around 618 area and continue to move down, starting an impulse to the downside. We have our head and shoulders being formed, and what I wanted to do, since we were so overextended in this market, I wanted to give myself a little more confirmations to get in. So if we drop down to the 1 hour, we'd be able to see this head and shoulders in a little more detail, and this is all structure. So this is a resistance area. That's all structure really is. Resistance and support, these are just important areas that the market will encounter, should encounter, and should either respect or disrespect. Depending on the trend, which way you're going, the market will respect those levels. If not, it will disrespect those levels. But as you can see, we have our left shoulder here, our head here, and our right shoulder is forming over here. We do not have the right shoulder breaking above the left shoulder. This is our structure area. As long as we stay below this structure area, we would like to see the price continue to the downside for an impulse correction and impulse move, which is the most common pattern in the market. So on the hour, play it forward a little bit more. This is what I was waiting for on the hour. I wanted to see price break and close below this structure level. So why is this a structure level? Price came to this area, it found support, it stopped, it created a blue candle and came back up. So after this candle had closed, this was now a structure area. In order for price to break this area, we would need to be in a lower high, lower low formation, which we are starting. We have lower high, lower low. Lower high, we'd like to see a lower low form. So not until this structure level is broken do we want to continue our bearish bias on this market. Once this level is broken, we're now creating lower lows and lower highs, lower lows and lower highs. This is exactly what we want to see in a market if we want to sell. So not until this level is broken, because if this level isn't broken, we're still bullish. All we did was just create a lower low and a lower high, which we need multiple lower lows. We need at least 2 lower lows, 2 lower highs for us to be in any type of trend. So once we get into this lower high formation, we would like to see a lower low printed. And after that, that confirms our bias that we're creating lower lows and lower highs on this market. Both lower lows, at least 2, lower highs, at least 2. Hour, break and close below this area. So now my bias is confirmed. I want to be short on this market. That is my bias. I have resistance here. Now I have what is previous support now broken and closed below, which should react and respect itself. It should react and respect this level as resistance. Previous support now broken and retested is resistance. Let's drop down to the 15-minute, which is where I entered, and I used a multitude of entries. So it wasn't until this candle. So at 5:25, we were entered in on this market. This is the 5:15 candle. So the next candle we were entered in on this market. Why? Well, this candle is the next one we would like to see fill in the wick. We've already created structure here. Price is starting to roll over. We've impulsed to the downside. Even on the 15-minute, we have impulses and corrections that still respect structure. We have an impulse which broke below the lows and closed below the lows. Then we have the correction coming back to this area. Previous support now turned resistance. Price is starting to roll over for the impulse to come down. So we have the price that the next candle is supposed to fill in the wick, which at least retest the lows down here, come in at least retest it. And we were entered and triggered in, boom, on that candle. And once triggered, we can play it out, drop out to the 1 hour, we'll play it out. Oh yeah, we were risk-free on this candle. So this candle formed. Once this candle had closed, that was when we went risk-free. So where did we put our stops? We dropped down to the 15, put our stops above the high. So we wanted to enter in. We had this high, this high, this high, and this high. We just wanted to make sure I'm putting it above this high, because if this high gets broken, we would probably continue to make higher highs and higher lows. More than likely, if we break above this level, because once we broke back below this level, we had then thus created lower lows and lower highs. First low, first lower high, first lower, second lower low right in here, second lower high, boom. We have traffic blocking us. So we entered in on structure. We have this traffic, we have all this structure blocking us. So we put our stops above the high, our take profit. We have to zoom out because we get our take profits from higher time frames. On the weekly, we had an overextended W formation. Where do we like the W formations to complete at? We would like to see W formations complete at the neckline. If we drop back on the hour, where do we put our targets? Our take profit was right above the level, gave us a nice and favorable risk to reward, a 3 risk to reward. So we took the trade. That was our setup. And then what happened? Play it back, continue playing it. Boom. As you can see, price came, retested the neckline of the W formation. After after we had an overextended impulse to the upside on the monthly, we were at the highs, at the highest we had been in 3 months. We were at the highs. In trading, you want to buy low and sell high, and that's relative to the time frame that you're on. So on the monthly, if we are at the monthly high, we want to buy low and sell high. It's not a good idea to buy at the highs because the market can't go in one direction forever. It has to impulse and correct, it has to ebb and flow, it has to move. So on the monthly, we were at the highs. We wanted to sell at the highs, buy at the lows. On the weekly, we had an overextended W formation that we would like to see the market come to the neckline and complete, because once we do that, we are then in an impulse correction and impulse on the weekly. So not that we wanted to see the market break structure to the downside, but we wanted to see the market come back, retest the neckline in order for the market to be in an impulse correction impulse pattern, the most common pattern in the market. On the daily, what do we have? We had an overextended W formation. We had price at the highs. We wanted to see it come back and retest the neckline. On the 4 hour, what do we have? We had a head and shoulders formation forming at the highs, which is nothing but just the impulse and correction pattern, but with little caveats and details in there that you can throw in to take advantage of the overall move, the impulse up and the impulse back down into the area, trap traders at the highs. Once we saw that, we then wanted to see price in formation, structure formation on another lower time frame on the hour. We saw price breaking structure to the downside, creating lower lows and lower highs. Then once we did, we saw that drop to the 15, looked for a good place of recent support, now turned resistance because we were selling this market, put our stops above the highs. We targeted our target area from the higher time frames, our overall time frame, our directional time frames. We targeted the area that we wanted to see the market reach from our overall directional time frames. That's important. Take profits, higher time frames, your stop losses, entry time frames. And it gave us a favorable risk to reward, an over a 1 risk to reward. Ideally, no less than a 2. It's pretty good, but gave us a 3, a little over a 3 risk to reward, which is pretty good. So there's nothing left to do but take the setup. Once triggered in on the market, price confirmed our bias. We went risk free, forgot about the position, come back to a nice take profit. Okay, so let's go over a little bit about structure. And really, you only need 3 things as a trader. You need this rectangle tool. You don't need your fibs. I need the fibs because I like my Fibonacci, and maybe a trend line. Mainly the box tool is all you need because this is going to help you identify structure. Well, we identified that on the weekly, we had an impulse all the way up. Yes, we have one candle that's not related to the move, but that doesn't mean that price necessarily retraced. It just means that that is a level in the market. So within this whole move up, we do have a level in the market that we would like to see price come and retest, because this level on its way up was the only level that the market encountered that really gave the market any type of resistance on its way up. So once this resistance level is broken, we want to see it act as support. To simply put it, to make this a little quick, an impulse is anything that breaks structure. Where price had found resistance, price came up into this area, and from this area created this black candle, which is a move down. It closed way down here, which means this level is resistance. So not until this level is broken do we want to see this market continue to the upside. So once this level is broken, this level of resistance, we see price break and close above this level of resistance. We are now in an impulse to the upside. We are now breaking structure because this structure area is our resistance. We're breaking structure to the upside. And once we close above this structure, we have now broke and closed above the structure. Once this structure, whether it's support or resistance, is broken, you want to see it come back, retest it, and act as the vice versa. So this previous resistance was broken and closed above. We want to see the market come back into this area and use this area because it stopped the market over here, pushed it down. We like to see the market stop the market from coming down and push it up here. So this previous resistance now turns support is our structure level. And you use that to identify if you're bearish or bullish. So if we are looking at the market at this point in time, are we bearish or bullish? We are bullish because the most recent structure is down here. This is our low. We've been creating highs. We are bullish on this market until we break below and close below this mark. This is on the weekly time frame, just to generalize. We're not dropping down on doing multi-time frame analysis, but until price breaks and closes below this structure level, there's no reason to look for sales, because now here comes the facts of what I've been saying. We are creating higher highs and higher lows. You cannot be in a downtrend if you are creating higher highs and higher lows. So we created a high, created a low, created a high because the market came to this area, found resistance, stopped a little bit, came down, created a little high, a little support level, and then we broke and closed above it. So we created a high, created a low, created a high, and then this would be the low of that high. This is where the market turned around, and then we created this high, but we're creating this high now. So we're creating higher highs and higher lows. Even though we created this high, we didn't really make a low yet. So we're still creating higher highs and higher lows on this market. We don't want to be selling a market that is creating higher highs and higher lows on the time frame you're looking at, on your entry time frame. We play it forward. What can we see? Price is still continuing to the upside. Now we want to sell at the highs and buy at the lows. It's not a good idea to buy here because we know price does not move in one direction forever. It has to impulse and correct, push and exhaust, ebb and flow. It has to move and come back. It ebbs and flows. It moves in waves. The market moves in waves. So it has to retrace a little bit. There we start to get our retracement. Are we bearish on this market yet? Just from the weekly time frame? No. Are we bearish yet? No. Not until this structure level is broken do we want to look for sales. Until then, we're still in a buy bias because this is our higher high and this is our higher low. So until we create a lower low, break structure, and start to create lower lows and lower highs, we're still looking for buys. We don't want to look for sales until that point. So what can you say? Market came and retest this area. Did we get a break and close below? No. Market came and retest this area. It was respected as support. It was broken and used as support here. Price came down. This is how you identify structure. You expect the market to come and retrace and test this area and use it as support because you know that this structure area was broken to the upside. Once this structure is broken, we want to see price come back down in this area and use it as support to continue our impulse correction impulse, or continue our higher highs, higher lows, higher highs, and higher lows. So what do you expect next? After you get a higher high, a higher low, we would expect the market to create a higher high on this market all the way up until we start to see break of structure. Not until then do we get the break of structure that we start to look for sales. So we're still buying. So if we drop down to the 4 hour, what can we see out of that? The higher time frame structures triumph the lower time frames, but there are structure within those lower time frames. That's how I use the multi-time frame analysis to find my entries and to overall find good risk to rewards for my stops and targets. But that's just a little brief overview of structure. Price is breaking structure. We found this level in the market. Price breaking structure to the upside. We want to see price come back, retest it before we get higher. Didn't come exact to the level, but we did use this level as this was now our support level. We don't want to sell until we see price below this level. Play it forward. Price breaking structure to the upside. So we found resistance here. What did price do? Break and close above it, come back, retest it, then we got long. Okay, well, within that move, we found resistance here. What did price do? Break above it, come back, retest it, use it as support. Well, within that move, what did we have happen? We found resistance here. Price broke above it, came back, retested, and now we're starting to break structure. Price broke this structure to the downside. We didn't break this low. Actually, don't even use that. That'll confuse them. But just stop it on this. And we're breaking structure to the upside, continuing to the upside. That's just a little brief overview. I probably will do a video dedicated to structure, analyze the markets and multi-time frame analysis. If you like that idea, if you like this video, these types of videos, these trade breakdown videos, analysis, these journaling of the trades, please drop me a thumbs up, hit that subscribe button, make sure notifications are on, and until the next time I see you, I hope that you are having a green week. I hope that you are having a green day, and I holla at you.